So let's take a look at how I do it. All right. Now, here we go. I bought 1 share of Apple at 100. Last price, this is going to go up and down as the shares are traded. Right now, markets are closed. So it's last time it traded, it was $1.21. The day range, okay, it went up 27 cents from yesterday. That's about 0.22%, okay? Now you notice that this company, Cody, which is a conglomerate, they basically own a bunch of small companies or middle-sized companies, okay? And basically it's a little holding company. Now it went up and down quite a bit more than Apple did, okay? That's just today. So you can see what your companies are doing on a daily basis. Now let's go, Now let's go to the day range. So Apple traded between $1.21 and $1.24. Today, the highest was at $1.24. The lowest is at $1.21. Now, this little dot here means it ended right there. That's about where it ended. It ended at 121.26. It ended at the very low today, okay? So you can see every day how they move, right? You can see 52-week range. That's pretty cool. Look at that, it's near the top. This company, Compass Diversified, is at the top of it. So it's almost near the top of the whole year at $24. Apple's down at about 80%. It's not at the bottom, it's not at the top. Now this is total change. So since I bought these stocks, one's up 21%, one's up 57%. Now, this is called the moving average. These are different averages. So 50-day, what was the average? So over the past 50 days, Apple's average share price was $1.32, okay? Its 200-day moving average was $1.22. So it's about $10 between 200 days and 50-day, okay? Now, the reason you want to know the moving average is we're going to go back and look at a chart. So one way to look at everything we just talked about is going to be found in a chart. So you click on Apple and it opens a chart there, okay? So what you can do, this is in one day, you notice that it bounced around. In the middle of the day, look at that, it was really strong. And it went from 3 o'clock, almost 3:46, down to 4:30. It went down from $1.24 down to $1.21. At the end of the day, it tanked. Now let's look at a 5-day, okay? And then look at it. So the 5-day moving average would be somewhere around in the middle here somewhere, right? Because you can kind of see that it bounced around. 1 month, there's 1 month you see it's been going down over the past month. 6 months. Wow, it was doing really good in August and September, October, November, December, January. Uh-oh, now it's starting to go down again. You can look at 1 year to date, means today. This is 1 year total. Wow. Year ago, it was way down here at 60. It's at $1.20. It's doubled over the year. 5 year maximum. So you can see that it was pretty flat over here from 1984 all the way into about 2000. Look at that, it was pretty flat, the stock. Then it started taking off because Apple basically took off in the 2000s. So what does this all mean? Well, let's do a quick look here to show you. You can look at, before you buy a stock, you can look at where it's going. And if you want to enter in, you're like, I like Apple, I want to buy it. I don't know when. Do I buy it here or do I buy it way over here? So what you want to do is you want to go up here. Indicators or moving averages here. This comparison, I can compare it to other stocks. Like I compare it to, say, Microsoft or something. So if I put in Microsoft, they're not a company. Let's put Dell. Dell makes computers. So Dell is a similar company. Now you can look at Dell is in the light blue, right? And dark blue here is Apple. Now you can see that over the years, here Apple was doing better in 2017 than Apple was. So Dell was doing better than Apple. But if you go up to, say, the past 2 years, you'll notice that Apple did a lot better than Dell did over the course of 2 years. But if you go back 5 years, you notice that way back here, maybe Dell was doing better than Apple. This just means that over time in the past time, that some stocks do better than other stocks, obviously. So you got to depend on how long do you want to hold it. Now, most people that buy stocks that aren't traders, investors, like to hold it for a few years, right? Now, if you would have sold it way back here, you would have lost money or maybe made a little bit. But if you kept it for a couple years, you see way over here that it went up. Moving averages, just you can do here and you can go. Let's go 20-day moving average, 20. We're going to make that purple. Let's do over the course of 50 days. We're going to make that, let's say, colored red. Dun, da, da, save. And you could do a moving average, let's say moving average of, let's say, 200 days. So you go 200. Let's make the color different. Let's make it orange. Save. There we go. Now you notice that the blue here is the stock price. Over the past few years, it's up high. Now, this is the 200-day moving average. Because it's 200 days, it's going to be a little lower. But notice it goes up. The red one is the 50 days, it's going up. Even the 20 days, it's going up. So obviously, Apple's going upward. Now, if it was going down, it would be kind of reverse. The stock would below the averages because it's heading lower and lower and lower. But the problem is, let's look at 2 years. Then look at 1 year. Uh-oh, you notice here that it's starting to bounce up and down. But the 200-day moving average, hey, it's done pretty well over the past year. Then you go to 6 months. Uh-oh, it's starting to go below these right here. The 200 and the 50, the 50 and the 20-day moving average. The 200, it's still above the 200. Now, the reason it's going to change is now we're getting less and less time. So over the 1 month, you'll notice that the blue, it crossed the 20-day, then it went below the 50-day. Notice that over the past few months, it's been going down. So maybe you don't want to buy it yet because it might keep going down, right? Now, 5-day, okay, and then, look at the 5-day. Now, this gold here, now you'll see that the stock is under the 200 because we're only at 5 days. But you notice that it's below this. 1 day, you'll notice that Apple went here and it decided it was going to drop down. So all these averages, these are called crossover points here. I don't know if you can see that. Let me see if I can zoom in here. Now, basically what you're looking at, well, that's not good. What you're looking at, when they start going above these averages, they start going up. So if you bought here at $123, it went up to about $124. But you notice that if you look back, let's just go over about a month, and you can see that Apple is on its way down. It's crossed the 200, it's crossed the 50, it's crossed the 10, and now it's going down to that 200-day moving average. Now, if I get rid of these, think. This is just way you can track a stock. And it starts going down, it'll cross these over. Now, what happens is you don't know when it's going to stop going down. Well, right here in 9/21/2020, it hit a bottom. Okay, and then it hit a bottom here at 11/3/2020. But you notice that here's the high and there's the low. There's the high and there's the low. There's the high and there's the low. There's the high and there's the low. And you can see that if you do a little like a line here, if you're going to draw a line, you'll notice that it's going lower and lower. But the lower part here, they're still a little bit higher. So it's still going upward. When they start crashing down, you'll notice that they're going to go down pretty dramatically. Okay, so let's go back to, say, a 5-year in Apple. Now, you notice here that if you could have bought it here and then bought it here and then bought it down at the low part, you'd be doing really well, right? Because you get it around 40 bucks here. But if you bought it up here at 70 and then you bought it up here at 120 and then you bought it up here at 140, you wouldn't be doing so well. So when it comes to buying and selling stocks, you kind of got to decide by looking at the charts over time, where is it going? Where does it seem to be going? The problem with this is very interesting. The problem with this is when you're buying and selling stocks, that's the past. So looking at the charts just allows you to see where it's basically going or has been going. Now, those indicators can kind of indicate, hey, it's going on a downward trend. So maybe you want to wait before you buy some more. Then if you see where it starts rising up, then you might want to buy more of it. So if you're going to be an owner of Apple, then you'd want to look at these charts a little bit, right? But trying to get in at the bottom is almost impossible. You just have to decide where's a good time for me to go into the stock, right? And now what we're going to do is, if you're really confused, we're going to stop this and go into part 2 of this and look at some fundamentals. I just wanted to share with you Apple, using Apple or Compass, the other 2 companies, how we can track Apple or General Electric or Verizon or whoever you're looking at buying through Yahoo Finance. And I showed you how to make these tickers and how to put them in there and how to do the basic day area, or like day traders would look at these areas. There's some other fundamentals we can look at, which we're going to do in the second part, looking at fundamentals. All right.